will start with question number 5. Here is the question. These are the information given. Now first let us look into the question. What all are given? Mr. A owns the following asset as on 1st April 2024. Compute total depreciation for 2025-2026. Okay. Now what all are given? These all are the asset details of asset, actual cost of asset, and written down value as on 1st April 2025 is given. Then rate of depreciation for each block of asset, each type of asset is given. Clear? Then the asset purchased during the previous year. So these all are existing assets, and these are the new assets which are being purchased during the previous year. So building number 13, building number 14, plant number 53. These all are the asset which has been purchased during the previous year, and this is the rate of depreciation which is given, and date of purchase is also given. Next, the asset sold during the previous year. 3 assets have been sold, and date of sale and selling price is also given. Now what we need to calculate? We need to calculate the total depreciation for the year 25-26. Now here we all know that we don't calculate depreciation for individual assets. We group it together depending upon the nature, and depending upon the nature, rate of depreciation will be calculated. So now here rate of depreciation is given, but they did not mention which block, which asset belongs to which block, but they gave some similar assets. See, building number 10, first asset, here you have different rates, 5%, 10%, 15%. So what we have to do is we have to put together all similar rates together. So now first we will go with 5%. Okay, 5%. Here you have one more 5%. Still any more here. Again in additional purchase also you have 5%. What you have been purchased? Building number 10. Actual cost is 8,60,000. Written down value is 5,10,000. Rate of depreciation is 5%. Then next, building number 12. Here rate of depreciation is 5%. So next, the third one is building number 13. So these all are buildings whose depreciation rate is 5%. So this all can be put together under one block. Okay, let us write block 1, where buildings at 5% depreciation. Clear? Now how to calculate the actual cost now? Now here opening balance of the asset is given, that is WB, written down value of the asset is given as on 1st April 2025. Now additionally one asset is been purchased under this block on 9/9/2024. Now you have to take the opening balance. Opening balance. Now we have under opening balance, you have two different assets. This is building number 10 and building number 12. Building number 10 and building number 12. Building number 10, written down value we have to take. Here actual cost is also given, written down value is also given. Now always you need to calculate, you have to take the written down value only. Now first written down value of building number 10 is 5,10,000. Here I have taken two columns. So first you have to take in inner column, add the amount and write in the outer column. Now 5,10,000 for building 10, and for building 12 it is 3 lakhs. If you add this you will get 8,10,000. Now after this, additionally the asset is been purchased during the previous year, additional purchase. Okay, so this purchase has to be added to the opening balance plus purchases. Okay, purchases made during the year. Here, for purchases, asset value, asset is given, cost of the asset is given, and date of purchase is given. Rate of depreciation is given. Now, building number 13 is being purchased. Why we are taking only building number 13? Because 5% rate is given. We are doing only for 5% block. Building number 13. Clear? Building number 13 whose value is 12 lakhs. Clear? Whose value is 12 lakhs. Now add these two. Okay, opening balance plus purchases. 8 lakh 10,000 plus 12 lakhs. How much you will get? You will get 20 lakhs 10,000. Okay. From this, there are few assets which are sold during the previous year. Now, you have to check whether this 5% asset is being sold or not. Okay. Now, what all assets are there with you under this 5% block? Building number 10, building number 12 and building number 13. Now, you have to check these three buildings are sold or not. Now, here he says building number 12 is being sold, whose selling price is 2,50,000. So, minus sale. Now, sale of building number 12, which is 2,50,000. 2,50,000. Now, subtract this, you will get the actual value which is right with you. Now, 2,10,000 from this 2,50,000 value is sold out. Now, you are left with 17,60,000. Clear? This is written down value of asset. Clear? Asset under block 1. Okay. Now, you will calculate the depreciation as per the rate which is given in the question. Now, 5% is the rate of depreciation. Calculate depreciation for this entire block. Depreciation is equals to 17 lakhs, that is written down value 17 lakh 60,000 into 5%. How much you will get? You will get 88,000. Clear? 88,000 is the depreciation for this block. The depreciation is 88,000. Now let us go with the second block. Second block, again remaining buildings. Now 5% buildings is over. Now remaining buildings, you have building 11 and here building 14. So which is for 10%. All buildings at 10% depreciation. Clear? Now, first, how many assets are already existing in the business? That you have to check. Now, see, building number 11 with 10% depreciation. Next, here furniture is there. Furniture we will take it separately. Clear? Then again, purchase. Under purchase, you have building number 14. Building number 14, 10%. Clear? Then furniture. Furniture we will take it asset separately because this is also 10% only, but we will take it separately because nature of asset is different. So, all buildings put together. Now, here opening balance or written down value as on 1st April 2025. Now, opening balance. Now, under this you have building number 11. Building number 11. What is the cost? Actual cost is 10 lakhs. Now, written down value is 7 lakh 50,000. Now, 7 lakh 50,000 you take it. 7 lakhs 50,000. Clear? Then next, to this add purchases. You have only one asset, one building with 10% depreciation. So, now take purchases. this column with the 10% rate, you have two items. One is building number 14 and furniture number 103. Now you will take building number 14 whose cost is 6 lakhs. Now is there any sale? Now you are having building number 11 and building number 14. Now you have to cross check with the question whether it is sold or still it is existing in the business. Now see the sale details here. Building number 12 is sold. No other building is sold. Only 12 is sold, which we have shown in the previous block itself. Okay. Now nothing is sold. Now if you add these two, you will get the written down value. Clear? Written down value of asset. Now 7 lakh 50,000 plus 6 lakhs. You will get 13 lakh 50,000. Clear? 13 lakh 50,000. Now how much is the rate of depreciation? Rate of depreciation is 10%. Allow 10% on 13 lakh 50,000 to get the depreciation value. Clear? Now depreciation is equals to 13 lakh 50,000, that is written down value, into rate of depreciation, which is 10%. How much you will get? 1 lakh 35,000 you will get. 1 lakh 35,000 is the depreciation for block 2. Now next we will go with the next block. Now 5% is over, 10% is over, like all buildings are over. Now next comes furniture. Okay. First 3 is over. Now furniture. Furniture 10%. Here he gave furniture 101. Then furniture 102. Already existing with you. Okay. Then next newly purchased in the previous year. Is there any furniture here? Yes. Furniture number 103 is here. So you have to show this in the next block. Now let us take it under block 3. Okay. Furniture at 10% depreciation. Clear? Now first opening balance. Opening balance. Now how many furnitures are already existing? Furniture number 101 and furniture number 102. Furniture number 101. Actual cost is 1 lakh, but written down value is 60,000. Always take the written down value only. 60,000. Then furniture number 102, 32,000. Take these values. Furniture number 101. 101 is 60,000. Then furniture number 102, whose value is 32,000. Clear? Add this. How much you will get if you add this? Add and write in the outer column. You will get 92,000. Clear? To this, add purchases. Any asset which is purchased under this block, we will include here. Under purchases, you have 10%. Furniture number 103, whose value is 1,78,000. Whose value is 1,78,000. Take this to the outer column. Now, add the opening balance plus new purchase. You will get 2,70,000. 2,70,000. Now, to this, if at all any asset is sold or all the assets are with you, that you have to check. Now, furniture number 101, 102 and 103 is in the business. Now, you have sold furniture number 102 on 24th December 2024. 30,000 is the value of sale. So minus sale value. Okay, minus value. Which furniture is sold? Furniture number 102, which is sold for 30,000. Write the amount in the outer column. 2,70,000 minus 30,000 will give you the written down value of asset. 2,70,000 minus 30,000. 2,40,000. Now we will calculate depreciation for this block of asset. Depreciation is equals to written down value into rate of depreciation. 2,40,000 into rate of depreciation for this block is 10%. You will get 24,000. Clear? Now next we have plant. Now what we are left with? We are left with plant number 51, 52, whose rate of depreciation is 15%. 15%. Now here in additional purchase also you have plant number 53 and you have motor car. Motor car we will do it separately. Then all plants we will put together. Clear? And even in sale details you have plant number 51 which is sold for 2 lakhs. Clear? Now coming to next block. Block 4. Plant at, what is the percentage rate of depreciation here? Rate of depreciation is 15%. Okay, at 15% rate. Clear? First opening balance. Now under opening balance you have plant number 51 whose actual cost is 3,20,000. Written down value is 3 lakhs. Then plant number 52 whose written down value is 40,000. Take the written down value here. Now plant number 51, plant number 51, next plant number 52. What is the written down value here? Plant number 51 is 3 lakhs. Then plant number 52 is 40,000. How much you will get if you add these two? You will get 3,40,000. To this, add any asset if it is purchased under this block. Now, this block plant comes under this block. Now, under purchases, you have plant number 53, which is purchased for 2,55,000. To this, add purchases. Okay. Plant number 53, which is purchased for 2,55,000. If you add these two, 3,40,000 plus 2,55,000. Before adding, do you have any other purchases? You have to check it. You don't have any. So, this value you will add it. You will get 5,95,000. Clear? After this, minus sale value. Is there any plant which is sold under this block? Yes, it is there. Plant number 51. Plant number 51 which is sold for 2 lakhs. Clear? Which is sold for 2 lakhs. Now 5,95,000 minus 2 lakhs. How much you will get? That will be the written down value of asset. Okay, 5,95,000 minus 2 lakhs, you will get 3,95,000. Now, calculation of depreciation. Depreciation, how much is a percentage? Rate is given as 15%. Here also you have 15%. So 15% is the rate of depreciation. So calculate depreciation. Depreciation is equals to written down value of the asset, that is 3,95,000 into rate of depreciation 15%. Okay. The value of depreciation here is 24,000. Next, block 4. Block 4, planned at 15% depreciation whose value is 59,250. Then fifth one is finally motor car. Motor car at 15% depreciation 73,500. Clear? Now total. Total. Add this, you will get 3,79,750. This is the total depreciation. Clear? This is how we have to group each and every asset by depending upon the nature. Here in this question, you need not identify. In this question, he himself have given the percentage, rate of depreciation is given. So, depending upon the rate of depreciation, we have grouped and calculated. Clear?